What's going on, guys? Back with another 330x portfolio and market update. So what happened over the market in the past 7 days? The market was going extremely bullish. The meme mania kept going. A meme coin called Whiff, dog with a hat, is being put on the massive sphere in Las Vegas. Elon Musk said he's going to allow people to purchase Teslas with Dogecoin. VanEck put out an article saying that Ethereum ETFs will be bigger than Bitcoin ETFs. It was all going great until it didn't. We had CPI data and PPI data, and they both showed inflation is going up. Of course, the market dumped with the news, and my portfolio went down 21k. In this video, we're going to find out exactly why that happened. But before we get to any of that, guys, please, for me, like this video, subscribe to the channel, and click that noti bell. Now let's get into the video. Right, guys, the first one I go to is Drake shilling Bitcoin to all of his 146 million Instagram followers. And of course, he shared a video of Michael Saylor that I'm going to play for you now.
Does it ever have to be a currency? Or do you think it ever becomes a quote-unquote currency?
It doesn't have to be a currency. Nobody's trying to buy a cup of coffee with a fraction of their building on Fifth Avenue, right?
Exactly. Then Dogecoin pumps, as Elon Musk says Tesla should enable purchases with meme coins. I'm going to play the video for you now.
When can you buy a Tesla with Dogecoin? Well, at some point, I think we should enable that. You can buy Tesla notes with Doge, which is cool. So Dogecoin to the moon.
Then we've got Dog with a Hat news. Dog with a Hat becomes 4th largest meme coin as community completes fundraising for Las Vegas Sphere showing. This is the Sphere in Las Vegas, and they've managed to raise $690,000 to put a hat on the Sphere. And not just for a day, guys. No. They're going to put it on there for 1 whole week. They gathered over 650k so they can put a hat on the Sphere. And you thought that was it? No. The bullish news continued. Ethereum ETFs could be bigger than Bitcoin ETFs, says VanEck. If you guys don't know who VanEck are, they are venture capital that already have a Bitcoin ETF and have applied for an Ethereum ETF. So what else do they say? Some say investing in an Ether ETF wouldn't make sense, as such funds won't likely allow staking rewards distribution. Investors argue if they'll be better off buying and staking their own Ether. The world of investors who are looking for cash producing assets is massive, and Ethereum obviously generates fees that goes to the token holders. Even if you don't have an ETF that can offer staking as part of it, it's still a cash producing asset. So I think Ethereum could make more sense as an asset to more people than Bitcoin does. This makes sense. Ethereum is a cash producing company. So we felt on top of the world. We had good Ethereum news. Whiff was going to be advertised in the Sphere in Las Vegas, and Elon Musk supports Dogecoin again. The crypto community felt on top of the world. But then what happened? Well, guys, CPI data came in, and it came in hot. 3.2 versus the 3.1 that was expected, suggesting an increase of inflation. But that wasn't the end of it, because then PPI data came in, and again came in hot. 1.6 against the 1.1 which was expected. So let's see what Bitcoin did in that time. 12th of March, it had a minor correction on the news, came back up. It's not a problem. Bitcoin doesn't care about inflation, or does it? 14th of March, PPI data also comes in higher than expected, and Bitcoin takes a massive dump. Tries to recover, but nope, takes another massive dump. And I'll explain why in a second. So Bitcoin went from 73k, the highest of the week, all the way down to 66k. And that's not even the lowest that it went to. The lowest is 65k. Now let's find out why. Well, on the 15th of March, Democrats to SEC don't approve spot Ethereum ETFs and any other crypto ETPs. And that right there just ruined us. Now let's find out exactly what happened. Senator LaFonza Butler of California and Jack Reed of Rhode Island said the SEC should limit future crypto ETF applications, and that other cryptocurrencies do not show the trading volumes or integrity to support associated ETPs. Both senators are also members of the Senate Banking Committee, which has jurisdiction over securities and financial markets. What's important here is that they're both members of the Senate Banking Committee. So what do we know about the big banks in America? Well, from a previous article that I covered on a video a couple of weeks ago, we know that banks are feeling FOMO. They want in on the cryptocurrencies ETFs, but they're not allowed to hold them just yet. So they need more time for appropriate regulations to be set in place so that they can invest into cryptocurrencies. And although we know that this is the case with big banks, the market did not react positively to the news. What's even more important is that Ethereum spot ETF end of May approval odds plummet to 28%. This news hit on March 15th. And that wasn't the only negative news we had for Ethereum ETFs. An ETF analyst from Bloomberg called James Seyfarth, who predicted that Bitcoin ETFs have a 90% chance of approval, and they got approved, has now lowered his percentage of Ethereum ETFs approval from 60 to 35. And now I'm going to play you a video of what he says when asked what is the difference between Ethereum ETFs and Bitcoin ETFs and why he thinks Ethereum ETFs are less likely to be approved.
Yeah, so the main reason we went to 90% for Bitcoin ETFs in early October was for a multitude of things. One, it was the court case. They won the court case. The SEC decided not to appeal. But the real key factor was that the SEC decided to give comments on the S1 documents or prospectuses. Okay. That was a completely new pattern. We have never seen them do that on the Bitcoin ETF. So that indicated to us that they were working on this, and if they wouldn't be wasting their time working on this if they weren't going to approve it. So the first actual filing was from ARK on like October 11th, I think. And we heard rumors in the weeks leading up to that there was comments coming in and there was feedback going back and forth. Right. We're hearing the opposite here. One, we're not seeing any documents. That was 91 days. We saw the first one before the ultimate deadline. We're 69 days out now, right? So there's still no movement. We're hearing that the SEC has not given comments. We're hearing they're not really interacting with the issuers off the record from different people. We're not hearing much. Basically, we're not hearing anything. Whereas anytime we heard something, the Bitcoin ETF, or we talked to people kind of involved in the situation, it was giving us more and more hope and security in saying that we thought this was going to happen. Whereas ETH is...
Okay guys, so they're not seeing any involvement from the SEC, and when compared to Bitcoin ETF applications, they were seeing this as early as 90 days before the deadline. We're now less than 60 days away and still no updates from the SEC. So everybody is becoming more and more bearish for the Ethereum ETF. Now let's have a look at what my portfolio did last week. I started the week with 102, 103k, had a very little retracement on the 14th, which is when that PPI data came out, came back up, then we had the negative ETF news and my portfolio crashed all the way down to 85k. But that was not the end of it. Bitcoin retraced and so did my portfolio, and then went for another leg lower all the way down to 81k. So let's have a look at how some of my coins were performing. We can see the Casper 10% down, Superverse 9%, Altura 14%, pretty much everything was down with the exception of Mint Layer, Thorchain, Seedify and Solana. Of course, the biggest losers were the meme coins, 47% down for Hemio and 42% down for Rocky. So overall, I was down 21k from the beginning of the week all the way till today, a few hours ago. It's a tough time to be in crypto, guys. Now, although I'm down 21k, you have to remember that this is normal for the crypto market. If we look at the last bull run, we can see that when we broke all-time highs, Bitcoin retraced almost 17%. And if we look at where we are right now, we just broke all-time highs, went slightly above, and then retraced with only 11%. Less than the correction we had last bull run when we broke all-time highs. So remember, corrections of 11, 20, 30%, they're normal for the crypto market. This is what happens and this is what will happen in this bull run. And my personal opinion is that this is not the time to sell. However, I am watching the market really closely and I am following certain catalysts that might suggest it's time to take some profits. Let me know in the comments below if you want me to make a video about exactly what catalysts I'm looking at and how I'm managing my portfolio in a time like this. Right guys, now moving on to some news. Crypto wallet Zerion is building a layer 2 network that aims to offer zero fees. Ultimately, we realized that for the end user, the fees should not exist, said Zerion co-founder Evgeny Yurteyev. He said the idea of paying fees is striking and unfamiliar for anyone who's entering the blockchain space. The big question is how the economics of offering free transactions will work. Zerion claims that subsidizing the fees will represent a cost to the business that will decline over time as transaction fee improvements are made. Yurteyev pointed to the recent introduction of blobs, which have dropped fees drastically on layer 2 networks. Now this sounds really bullish for Zerion, because this move to fee-less transactions can potentially onboard a mass amount of retail users. If you think about it, when a regular person sends money to a friend or family via Bax, they don't pay any fees. And if they go to a shop to buy groceries, they don't expect to be charged a fee for a transaction. So the business covering for transaction fees on the blockchain is the closest thing we will get to day-to-day Web 2 banking and payment processing. Moving on to the next one, Bitcoin SV down 22% since court ruled Craig Wright is not Satoshi. I mean, guys, we all knew this. Craig Wright clearly just wanted all the hype so that his blockchain Bitcoin SV could go up. For those of you that don't know, Craig Wright claimed to be Satoshi Nakamoto and went into court to prove it. Obviously, he lost. And the blockchain he created, Bitcoin SV, had previously pumped and of course suffered a major correction on the news. Okay, moving on to the next one. MicroStrategy's leveraged Bitcoin buys could lead to severe deleveraging if market drops, says JP Morgan. Now, of course, guys, you already know that JP Morgan are massive crypto bears, but let's see what they say. We believe debt-funded Bitcoin purchases by MicroStrategy add leverage and froth to the current crypto rally and raise the risk of more severe deleveraging in a potential downturn in the future. JPM analyst led by Nicholas Pangirdzoglu, sorry if I pronounced the name wrong, wrote on Thursday. So if we actually look at the open interest, we can see that yes, leverage is high. We're currently at 34 billion as opposed to 23 billion at the last market top. So yes, we're slightly over leveraged. Is this because of MicroStrategy? Probably not. MicroStrategy has taken loans and invested loans into Bitcoin. They haven't taken any leveraged positions. So will we crash because of MicroStrategy? Probably not. But is the open interest quite high? Yes, it is. And the correction is happening right now. But we know that this is healthy for markets because this is exactly what needs to happen in order for the market to continue going up. Okay, moving on to the next one. Just in, Vanguard CEO says they will not offer spot Bitcoin ETFs because it's not a store of value. Let's have a look at the video.
Question came in, hey, we know you're not offering one. Have you changed your mind? What would it take for you to change your mind? We don't plan to, and we're not going to change our minds around this. Unless the asset class changes. Yep. Why? First of all, we don't believe it belongs. Like a Bitcoin ETF belongs in a long-term portfolio. Someone's saving for their retirement. It's a speculative asset.
That's exactly it.
And the funds that we offer invest in asset classes that actually have underlying cash flow. So, like we mentioned stocks, you're buying the forward earnings of a company. Right. And that bond, right,
has coupon and principal payments.
Yeah, you're going to pay me something for lending you the money.
Exactly.
Right? So they both can be valued. And that's for us, we understand why they would rise up in a portfolio and the role they would play, and we can model them. Something like Bitcoin is just too volatile, and it's not a store of value. It hasn't been. And it's very volatile. When stocks got hammered in recent crises, that Bitcoin went right with them. And so it is speculative, really tough to think about how it belongs in a long-term portfolio.
Right, so they're saying that it hasn't been a store of value. Now, I'm going to show you a chart. And this chart is gold against Bitcoin. And you can see that at the moment, if you compare gold to Bitcoin, gold is basically devalued. It's 0.03. And it's not just gold. If you put the same chart with the Nasdaq 100 and Bitcoin, you'll see the same result. If you put the S&P 500 against Bitcoin, you'll see the same result. So regardless of what Vanguard said, this asset class has outperformed any other asset class in the world over the past 13 or 14 years. Okay, moving on. Goldbug Peter Schiff says he wishes he had bought Bitcoin in 2010. Peter Schiff, a prominent stockbroker and gold investor, rejected the opportunity to invest in Bitcoin when it was trading at a few dollars in 2010. Despite his long-standing criticism and comparing Bitcoin to Tulip Mania 2.0, Schiff said he would have invested solely for the potential of profit, and he compares it to gambling as opposed to a genius move. Do I wish I had made the decision to have thrown 10,000, 50,000, 100,000 into it? Sure. I may be worth hundreds of millions assuming I didn't sell. But again, I don't know what I would have done had I made that decision. It blows my mind how Bitcoin can outperform any asset class in the world and people still think it's a gamble. It's the most secure network on the planet. The supply will remain the same regardless of the demand. It's completely decentralized, open source, and you can track any transaction on the blockchain. Yet some people still say that its only use is for illicit activity and that it's a gamble. It just blows my mind, really. Next article, Hong Kong regulator says crypto exchange MEXC has been operating without a license. The country started accepting applications for crypto firms to get a license to operate in the country June last year. Obviously, MEXC didn't submit one, did they? The CFC will not hesitate to take enforcement action against unlicensed platforms where appropriate. I think this is a call for MEXC to go and register before they get fined. But that's not the end of it. Hong Kong's markets regulator issues warning against crypto exchange ByBit. The Securities and Exchange Futures Commission added 11 ByBit products to its list of suspicious investments. And what were those 11 products? ByBit futures contracts, ByBit options, ByBit leverage tokens, dual asset 2.0, ByBit shark fin, liquidity mining, Ethereum 2.2 liquidity staking, ByBit Web3 staking, ByBit lending, ByBit wealth management. The CFC is concerned that these products have also been offered to Hong Kong investors and wishes to make it clear that no entity in the ByBit group is licensed by or registered with the CFC or to conduct any regulated activity in Hong Kong. Last but not least, the CFC will not hesitate to take enforcement action against unlicensed activities where appropriate. So this is also a call for ByBit to go and register before they get fined. And ByBit replied, since different products are listed for various regions to meet local compliance requirements, you can be confident that these products are not available in the Hong Kong market, the spokesman said in an email. ByBit maintains a close dialogue with regulators around the world, including Hong Kong, and strives to comply with all applicable regulations. So two different sides. One says one thing, the other one says another thing. The question is, ByBit, do you want to get sued? Or do you want to register? ByBit, I think you should register. Next one. How an appeals court ruled on an inspiring class action lawsuit against Binance. A federal appeals court ruled last week that Binance needs to face a putative class action lawsuit from a group of US-based crypto investors who allege the exchange allowed them to buy and trade unregistered securities in the form of certain cryptocurrencies. The ruling doesn't make a determination on whether the tokens are indeed securities or not, but it's significant in broader securities cases nonetheless. So essentially what happened is Binance was being sued by US investors saying that they allowed them to invest in unregistered securities. Binance managed to dismiss the case, saying that it's headquartered nowhere, so it can't be sued by the US government. But now there's been an appeal filed for this exact case, which has reached appeals court, and the judge has ruled that there is right to sue. Now let's find out why. Binance tried to argue that it was a decentralized exchange and therefore US courts did not have jurisdiction. The judges did not agree. Further down, they added that the plaintiffs also made a compelling argument that the token orders were placed within the US because of where Binance's servers are. We conclude that the complaint plausibly alleges that matching occurred on the infrastructure Binance relies on to operate its exchange. In this case, Amazon Web Services servers in California. The judges also ruled that the plaintiffs had plausibly alleged that they filed the suit within the statute of limitations, which did not begin until they actually bought the tokens in question. So the lawsuit against Binance continues. This is an ongoing case and I'll keep you informed when I know more. Avalanche Foundation reveals 5 community coins it holds. And what are the 5 community coins? Meme coins such as Kokinu, Gecko, Kimbo, No Chill, and Tech. Including these coins in its portfolio is part of the foundation's broader Culture Catalyst program, which claims to foster Web3 creators. So we're still getting really good meme coin news, but the charts are not showing any continuation of the meme coin rally. Okay, next one. AI startup Figure shows off conversational robot infused with open AI tech.
Hey, Figure One, what do you see right now?
I see a red apple on a plate in the center of the table, a drying rack with cups and a plate, and you standing nearby with your hand on the table.
Great. Can I have something to eat?
Sure thing.
Great.
Right, I'm going to stop it right here because it's quite long, but you can see that the robot actually realized exactly what's on the table. He realized that the apple is the only thing that that person can eat, took the apple from the table and gave it to the person. And I'm going to make a bold prediction, but I think that in 10 to 20 years from now, we'll probably have a robot just like this one in each of our households. Very speculative. I think first they'll hit warehouses where they can help with all the heavy lifting, and eventually they'll be integrated into people's homes. And here's some actual proof for that. Mercedes-Benz to put AI in its assembly line robots. It's still very early stages, but it just seems like the next step forward. Right, on to the next one. The biggest bank heist in history is coming. Regulators are permitting banks to tokenize financial assets such as bank deposits, US treasuries, and corporate debt, but they want institutions to use permission networks rather than decentralized blockchains that keep assets safe from hackers. So before we get to the ins and outs of the article, let's find out exactly how much money they're trying to tokenize. Banco reports data shows that the top 4 custodian banks alone now safeguard over 108 trillion in assets. These assets are in process of being tokenized by the big banks, which is the process of creating digital representations of real-world assets and liabilities on blockchain. These banks have been piloting the tokenization of bank deposits and will soon turn to tokenizing US treasuries and corporate debt. So 108 trillion in assets are being tokenized. Okay, now what is the difference between permissionless and permissioned blockchains? Permissionless blockchains are maintained by thousands of validators that are not subject to regulatory authorities, while permissioned networks would be controlled by banks. Okay, so of course banks want all the control, but what do they sacrifice to achieve that? Regulators tend to misunderstand the key feature of blockchain technologies, which is decentralization. A truly decentralized blockchain requires thousands of validators to build and maintain it. This also means that if one validator is attacked, then the other validators can continue to operate and support the blockchain. This is the ultimate definition of operational resiliency. Truly decentralized blockchains are very challenging to hack. In fact, the Bitcoin blockchain has never been successfully hacked since its inception in 2009. By contrast, most successful crypto hacks usually involve centralized protocols where hackers only need to hack the admin keys of only one or a few actors to gain control and steal digital assets. Similarly, permission networks are controlled by only a few parties, so they can be more easily hacked than blockchains maintained by thousands of validators. So by using these permissioned blockchains, the banks are essentially putting a target on their back. Now let's see what the authors of this article think this might lead to. Encouraging the use of permission network over permissionless blockchains will inevitably lead to cybersecurity attacks on a scale previously unknown as the financial system moves to tokenize trillions of dollars worth of real-world assets and liabilities. The biggest bank heist in history is in the making. This sounds scary. Now to end on a positive note, let's watch Elon launching the Starship. This thing is 120 meters tall and weighs 5,000 tons. Just launching in space. And there it is. Alright guys, we've now come to the end of the video. If you like the information I provide to you, please make sure you're subscribed and you're following me on Twitter at Alex Yanakov. Goodbye and see you in the next one.